All right, hey, what's up, everybody? RPM with you here. Trader Spotlight Live, DayTraderRadio.com. It is Thursday, February 16th, 2012. It's right here at about 20 minutes after 9. And we've got Jaymes42 from Ireland on the line with us. How you doing, James?
Hello, I'm not too bad. How are you?
All right, pretty good, man. Thanks for stepping up to do the spotlight. Appreciate it. For those out there that are new to Day Trading Radio and you don't remember James's first spotlight appearance, I guess it was probably 5 or 6 months ago. I guess it was, James. Do you remember?
There was an earthquake on the show, I remember.
Oh yeah, that's right. It wasn't our it was a afternoon show that we had you on. I thought we had you on a Trader Spotlight in the evening.
No, I think it was a matinee.
It was.
Yeah.
Maybe it was the earthquake in Japan and they had the tsunami.
No, it was the earthquake in America.
Earthquake in America happened during the day. I remember I was on the air.
Yeah, you were on the air to me.
But that was during the market hour.
Yeah.
Yeah, you said it was a matinee. Well, anyway, you're in Ireland, so the time difference might be factored in.
Yeah.
Yeah, okay. Well, anyway, so it's been a while. All right, so yeah, it's been a while. It seems like it's been a right long time. So why don't you go ahead and get started by just telling us about yourself and what you like to trade, and about your membership with Day Trading Radio, and maybe some different aspects of trading from Ireland.
Yeah, no problem. For those who don't know who I am, Jaymes42 in the chat room, or Emmett McMahon. I've traded with Day Trading Radio for about 3 years. I trade a variety of different equities. But what I prefer to talk to you about is just a certain list of possibly indices and shares. And hopefully teach a couple of people a few things on how I trade and how I can help improve your trading.
Yeah, see, night. They're just clarifying it was an earthquake in the U.S. and then wherever he is in night, he had the salami. Yeah,
Salami, yeah.
Yes. Yeah. All right. So from what I remember, last time, you do trade futures, don't you?
Yeah, no, I trade futures, mainly the ESU one.
Mm-hmm.
Quite good at it. Don't mean to boast my own horn, but yeah. There's a few people in the room, I'd say, who I really respect on the ESU one. And that would be, I think, Cousin Vinny. I think there's another one, another trader out there who's, I'm not sure if he's still with you guys. He used to play a big part to giving live posts on ESG1 trades.
Okay.
Learjet isn't one of them because I think he's a crap trader. Just throwing that out there.
Yeah, well, I know you and Learjet are really good friends and all, so it's nice of you to give him a little.
Yeah, no, I'm just messing up.
Oh, there's Learjet crawling from under the bus.
No, I'm still waiting to have him head to head on Trader Showdown.
Yeah, who do you want to go up against? Learjet?
Learjet first, yeah.
Yep,
I think that would be
yeah.
someone easy, of course, yeah.
Sounds like next week, man, when everybody gets back from the trading show.
Yeah.
Okay. Yeah, we have you had a chance to check out the futures, the separate futures room in the chat room yet?
I haven't because I'm using Google Chrome and the Java on that's a bit iffy. So I can't actually open the Java chat room. I'm getting the HTML chat room.
Oh, okay.
It's just a bit it's not so aesthetically pleasing.
Right. So you're having problems with both the Flash and the Java? I can help you with that one.
Yeah,
maybe another time.
Flash and Java.
Yeah.
I think on Explorer it works fine, but just when I'm trading on the laptop, Explorer is pretty slow for me.
Yeah, I think probably what it might be is it might be a firewall issue with your wireless connection if you have a wireless connection with the laptop.
Yes, wireless.
Yeah. What I was going to say is we've got a lot of traders, a lot of futures traders have been hanging out in the futures room. And there's a couple that come to mind that look like they know what they're doing. Jay Galt is one. he can come in the morning and post a trade. You can see it get filled, and then he'll say, I'm filled. And then 3 or 4 hours later, he's exiting with 10 points. Which is pretty amazing to me. And then we have a few more, too. We have there's Dawit in sending me the something about the S&P chart. What are you sending me here, Dawit? Yeah, Dawit. Thanks. Yeah, I found it. That's a good one. I use free stock charts and stock charts. Was making a comment earlier, and I guess Dawit was listening, that we are so close to those highs from back a few years ago. A couple of years. How far was it? A couple of years. It seems like a few years ago, but it was. When was it? Was it 1370 on the SPX? Is that what it was?
I think we're definitely in the 1300 years. 1300 last year, before the whole American situation where they couldn't pass the bill in time and got their AAA status threatened, and then the market scratched off to around 1100.
Right.
I think bottom.
It was. Let's see. Well, we're right up there near the. Was it 1370 area? Oh man. You know what? This is irrelevant anyways, because 2-3 years from now, when people are listening to this show, they're going to be like, "What are they talking about? 1300s?" We're either going to be in the 900s then, or we'll probably be closer to the 1600s or something for the S&P. So there's no telling where we'll be. So it's probably irrelevant. I tell you what, you really stand very, very still at that window you're looking out. I'm looking at your Skype.
Oh, yeah. Yeah, that's my apartment.
Yeah. All right. So how old are you?
I'm coming 22 in May.
Okay, so you're an old man. Yeah. Yeah. Well. So and you've been trading. You've been a Day Trading Radio member or listener for about 3 years. So you've been trading pretty much.
Years, yeah.
So they let you guys trade pretty young there, I guess.
Well, what's the limit over there?
I don't know. I really don't know. I know Learjet is 17, so he seems to be an active trader. Let's see who else there. No, I'm just kidding. I'm guessing it's 21, 18 or 21, either one. I think you can probably trade at 18. I think. Yeah. So
yeah. Well, that's when I started, but my history of technical analyst goes back to maybe when I was a young kid. I was really pretty interested in stocks and shares, and actually the timing of me turning 18 was perfect with the timing of the markets crashing, so It was perfect opportunity for me to get in. To start off.
Right.
Because everything was so low back in. I started January 2009. And, my first 2 months weren't the greatest, but March 2009 on the FTSE for sure, and the markets just maybe rallied for 6 straight months.
Yep.
I mean, you were buying stocks like Ford for $2 a share.
Oh yeah, I bought some for $2 a share and sold it for $1.08.
I think I did that. I think I did that exact same trade before I got in it slightly cheaper.
Yeah.
And then I think it ended up coming back all the way up to near $20.
Yes.
I'm not sure where it is today, but.
Yep. That was back in the Sirius satellite radio days at 8 cents and 9 cents a share, and now it's
I think
now
I
it's
got
$2.50.
that roughly up there. Yeah. Sirius satellite was I met a Mormon guy who was going about my area, knocking on doors, and I was just chatting with him. He was from Utah. And he told me about this Sirius satellite after I told him what I did, and he goes, "Yeah, no, it's a really great thing. Everybody uses it."
Yep.
Something about it being a radio device, like an iPod sort of mini, but connects to the radio.
Yeah.
So I thought to take a look into that, and it seemed like a great product. So I bought some up pretty cheap, and then I think it rallied. Well, where's it now?
Oh, 2,000%, 220 or something like that. $2.20.
Yeah.
Let's see. Yeah, I played it a few times. Cousin Vinny was an expert on that at one point. Um, it's $2.14 today, 2.15 today, but it's been up in the 270, 280 area, I believe. Um, yeah, but those are the times,
Yeah.
man. It's still a cheap stock, but 8 cents was very attractive. Um, yeah, um, so James, would you say that the majority of your trades are futures trades, or are you still trading equities? Do you ever do options or ETFs combination, or what would you say is your favorite?
Um, I don't have the specifics to my trading methods that I usually follow. I have like a written plan to follow. Um, Due to my computer being down, but I'll give you an accurate sort of run over of how I trade. I think roughly maybe 10% would be day trading.
Mm-hmm.
Actually, no, maybe 15%.
Okay.
We'll talk 20% week trading, holding from Monday to Friday, possibly 2 weeks.
Wow.
Another 20% would be month trading, holding at least a month.
Mm-hmm.
Usually, the average is 1 month to 3 months, and then the rest would be. I like to keep 25% of the portfolio not in trades, and the rest would be anything I really like that I might want to hold for a couple of years or 10 years as a retirement fund.
Okay, so when you say 15%, 20%, 25%, you're talking about as part of your entire portfolio of all your assets. Okay. Now,
Yeah.
all right. But what like are you trading equities? Are you trading futures? What would you? What's the majority? I mean, is any of it ETFs? I mean, what's your favorite sectors? Anything you can elaborate on would be great.
I probably trade would be stocks the most on indices.
Okay.
But I trade futures quite regularly. I might have 5 stocks to the 1 future as a hedge.
Okay.
So if I have 10 stocks, I'll double up what I pick in the future. I like to get some forex play.
Okay.
Sorry. Forex. I like to do forex, currencies, commodities, and occasionally buy some bonds. And then apart from the way I just told you, I break down my portfolio. I also break down my portfolio into risk assessment, where a lot of my portfolio will be trying to get maybe 3% over a period of a month to 10% over a period of 3 months. With very low risk, then I would look to lose maybe 1% to 2% in these trades. And then when it comes to day trades, I like to play around a bit more, maybe lose 1%, make 2%, but to do these a lot faster. Usually it works out about, on average, maybe for every 1% I lose, I make 4%. And then I've got some really high risky assets, like I'd buy some Spanish junk stock. And usually you're probably going to lose everything you invest in that, but I might only invest maybe 1% of my entire portfolio into these. And if they work out, they could return maybe 10-15% of my entire portfolio profit.
So, but you said a lot of you have some swing trades that play out for weeks at a time sometimes.
Yeah, I mean, if I really like something and it doesn't work within the week, I'll hold for maybe a second week.
Right.
Excuse me. Sorry, go on.
Do you find yourself setting hard stops? Because I know you mentioned that you try to get out if something goes against you by like 1% or 2%, and you're looking for 3 to 5% gains. But do you set hard stops when you're in a trade? Do you go ahead and set a hard stop to lock in that rule?
Can you still hear me, by the way? Yeah.
Yeah, we can hear you.
Yeah, sorry about that.
No,
I'll set hard stops on stuff that I might look to hold 1 month to 3 months, because I know there's going to be very little movement to the downside if the trade is going to be working out. It really depends on the trade again. Like if I pick a channel trade, I usually take the width of the channel, divide by, or take a quarter of the width of the channel and put it below the bottom of the channel, and I give that amount of pullback from the channel as correction, because sometimes it can spike below before rallying up.
Oh yeah.
Then when I like to buy at the bottom of the channel, so when we get to the top of the channel to consolidate and break out, I can put in new stops so that if we don't break out, it falls back. I lock in profits automatically. If it breaks out, I look for double the channel to break out for targets. And then again, I just like to have maybe moving stops. So if it pulls back, I lock in profits. Then with day trades and much shorter trades, I like to have mental stops, which is a real thing. It's where you have this, where you want out in your head, and it stops people racing to cut you out of your positions by hitting the area you might have your stop and then quickly bouncing back. So you leave a bit of room for volatility. So maybe you have a stop $1 down, it spikes down $1.50 and then flies up maybe $5. You've been stopped out and missed a good trade, so you have to sort of take that into mind. So I like to have some mental stops, but you've got to kind of have a very tough sort of situation, a tough sort of opinion of it, and really force yourself to have to take these sometimes, because you can get to the situation where I'll hold a bit longer, see if it turns around, hold a bit longer, see if it turns around. There has to be a point where you definitely must get out, or else you'll just increase your losses. I've heard people say who are going into losses, I ask them why aren't they getting out. They'll say, well, if it goes down another 10 points, I'll get out. And I just say, well, why not just get out now? Like, you're just willing to lose another 10 points. Just take it now, walk away with your 10 points. Whereas 10 minutes later, they're down that 10 points, wishing, using hindsight, that they had taken earlier. And I think a lot of traders will have that, where they'll say they'll do something, and then they'll look back over it later saying, why didn't I do that earlier?
Yeah, and I think what happens during the day when people are trying to actively manage a trade, what I have seen, and this happens to me, but you follow the market as a whole at the same time, and you try to justify some point in the market where there might be a bounce, and you're correlating that with your particular position, and you're thinking, okay, my position can't really get any worse. The market is getting ready to bounce here, or may pull back a little bit more, but it should bounce there. Just the stock that in the trade you might be in, though, may not be following the market. It might be having a mind of its own. So then you wind up with a bounced area in the market. Let's say the market is pulled back as a whole, and you see a good area of support, and you want to hold on to your position, and then your particular stock isn't really following the market, and it keeps going even lower. I've had that happen to me so many times, and I wind up turning a small loss into a bigger one, which is extremely frustrating. But I know what you're saying, though. You do kind of have to manage the intraday trades without setting hard stops. It's a little trickier. So you mentioned, a stock coming down $1, coming down maybe another $1.50, and then going back up and running up $5. I'm assuming you're talking about stocks that are in the price range of $100 a share, $200 a share. I mean, what is the typical what's the typical price range of the positions that particular securities that you're trading?
Yeah, well, if I was talking maybe a 3-month trade, the share would probably be between $20 and $40 to move $5 for me.
Okay.
But if I'm looking at very in a width of a day, you're talking maybe a company that's has the same value as maybe Apple or Google.
Oh, right. Yeah, and $5 on Apple or Google is really nothing in a day. The way they are, they're expensive, so they run around like crazy. So how about ETFs? We have a lot of people that are interested in and also trade ETFs in our chat room. Just curious, are you ever trading ETFs at all? Or do you follow any of the ETFs?
Yeah, no, I I follow a lot of stuff, but excuse me. I mainly would trade just normal common stock and derivatives. Whereas exchange traded funds, I would sort of it's yeah, no.
Not a whole lot of ETFs. Okay.
No.
Okay. Do you find yourself shorting regular stock? Are you pretty much a bullish guy, or do you try to trade both sides, or do you hedge using futures, or what do you like to? How do you like to manage it? When we're in a bearish trend.
I used to be a very bullish guy. Because I grew up on a bull markets almost when I came in 2009, and I kind of didn't want to see the markets turn around and go lose all their gains. That was kind of disappointing, but I turned to a permanent bear back last year. Again, around the time, just before the time America got downgraded on their AAA status. Being a full perma bear hasn't been the greatest the last month, with the markets rallying quite a bit. I think the markets have had a lot of strong positive news, but again, I'll say I'm a bear, but I'll have a market neutral portfolio.
And it seems like the world's coming to an end. And the market doesn't care; it just keeps going up. So it's like, I can see people bearish on the economy, bearish on the outlook, stagnant, slow growth, and yet the market is the place to be. It seems to want to go up. And I guess as the James focus on the ES. Gas is asking that you maybe talk about the ES some.
I'll focus on the ES
okay.
in a minute. I'll just talk about your question there on the markets. About them going up, yeah, I think the markets, we're in a bad way. There's a lot of positive news. Especially in the last maybe couple of weeks, where we've remained on the FTSE. I know on the FTSE 100, which is valued about 5,800. We sort of stayed there for about a 40-point range of 5,870 to 5,915, which is a big difference to maybe a couple of months ago when we were having those 100-point swings. With all this positive news, the markets, it's forcing the markets to go up, but they're not breaking certain barriers. At the same time, there's a lot of bad news where the market should be valued at around 5,000 on the FTSE, which would be probably 1,200 on the ESU1. And I think the problem is everybody's accepted all the things that are bad in the world and buying up the rumor as if, yes, everything is going to be good. Yes, Greece is getting the bailout. European financial institutions won't get downgraded, and that may be the case, but it's still not the way the market should trade. The market should trade at a lower price. That way, if all this good news does hit, we've got maybe a 200-point upside on the FTSE straight away. But if the news comes out bad, we've got a 700-800 downside points on the FTSE. So the market's left itself in a very bad way, with not correcting itself, which leaves us very at risk if you're alongside to the short side, if the markets head down, because there's just much more downside than there is upside right now. And you can see that with the positive news keeps coming out, but the markets are moving up a lot slower than they would move down if bad news was coming out. I'll start focusing on the SU1 now. When I think of the SU1, I trade it completely different from the S&P 500. The S&P 500 I'll look at in longer terms, maybe a week to a month to 6 months. With the SU1, what I like to do is go in fresh start to the day, not really consider what's happened before I sit at the computer. Just watch it for a while, try and find some sort of trend to trade it, and you'll see TTRS puts great trends up as he follows the markets. This is pretty much very similar to what I use for the ESU1. If you see it coming down to one of the lines he draws in, these are support and resistance lines he draws in. They aren't just a nice pattern he's putting up. This is things that people actually, that they work because people see it hit that line and they buy it. So a lot of buys come in and they shoot or bounce off of them. So this is why support and resistance works. So that's the way I'll trade the ESU1. And then I'll trade the S&P for more fundamental reasons.
Mm-hmm. Just want to mention anybody out there that has a question for James, you can just throw it in the chat room there. Stick RPM on the front of it. I'll see the icon, or either you can send me a private message. All right. So you watch John's show pretty much every day?
No, I would love to, but I'm always so busy with work, with trading, that I rarely get a time. I'm trying to get more and more time to come on and throw some live calls out on the SU1. But it's very hard for me, especially in these market conditions where I'm having to put a lot of my spare time into researching the markets, especially when I'm in the middle of America and then Eastern Europe, where there's a lot of big news coming out, like, again, the Greek bailout issue, and then American positive news keeps coming out, so I've got to kind of stay up a bit longer to hear the rest of American news and get up earlier to get some of the Greek news before trading day starts, because I'll be up maybe at 3 a.m. some nights and just see some new news come out, and it's good to get in on the ESU1 early. I find actually works the best when European news comes out, because you guys are all asleep, and then I can get in early.
I'm not asleep.
No, but maybe.
Everyone else.
Yeah. RPM doesn't sleep.
Some days, man, I get an hour. That's it, you know.
He's just got a cord coming from his back that plugs into the USB slot on the computer, and he recharges.
I wish. That would be nice.
Yeah.
I remember that one spotlight show that we did in the tsunami hit. It was in Japan, and where earthquake hit, and then there was the tsunami in Japan, and we were up watching that on the Trader Spotlight, and we went to about 6 o'clock in the morning, from 9 o'clock at night when we started the show to about 5:45, 6 o'clock in the morning, and we were actually on air doing that. And that was a crazy night.
Yeah, no, I got a phone call from my cousin. I think he'd been at maybe at a nightclub, and he'd come home and obviously put it on the news, so he gave me a call to get me up. That was actually really crazy because the footage was so graphic. I think it was kind of disturbing.
Yeah.
It's just what happened. But I mean, didn't a couple of people die in America from it?
I don't know.
I heard the waves. They went all the shock sent the waves all the way around the world to the east coast, I think. I'm not sure. And a lot of people went out to see the waves because they were told they would be able to see the waves, and it came up to the piers and swept a couple of people off.
Yeah, it's crazy.
Yeah.
We got Gas in our chat room there asking, is the ESU1 the same thing as our H12?
ESH12. I don't know, but I know that there's multiple futures for the S&P 500, so probably is. I just picked the ESU1 because I probably saw it first and just sort of started learning the ESU from this year's site here.
We've got Learjet calling. What's up, Learjet?
Hey, RPM, can you hear me okay?
Yep, I hear you good.
Good deal.
What's up, Aaron?
What's up, Andy?
Not much. Don't change the subject.
Sorry, I'm out of breath. I was running around in the in the basement for a minute. Let me catch my breath here.
It looks like you got you a nice cup of coffee there.
Yeah, that's my coffee from Vegas. It was $6 a cup.
Wow.
Inflation much?
So you guys know each other somehow.
We met through the site, but now we kind of took the mick of each other for a long time.
Mhm.
And he obviously was sort of attracted by my good looks and my skills in trading, so you know, he wanted to be my friend, obviously.
You know, he tries that on just about everybody, James.
It works too. I
I'm just
wanted
messing.
to hear a little bit more about your calling the correction to the downside and whether or not that's only because the market's not moving up as much on good news as it is down on bad news. Talk a little more about that.
Well, the fact is that there is a lot of bad news still out there in the markets, and we're at highs where we were in it, where the market levels right now are at levels they were when the economy was much better. Yes, the American economy may be good, but if you look at all the factors like the European debt crisis with Greece, the whole bailout situation, the back and forth austerity measures not getting passed, that does two things. One, it just delays everything. People get more annoyed, and second, it shows a lack of confidence in the European Union to act as a team, and the Greek Parliament to act as a team to get things sorted out. Much like the American government last year, when they couldn't get those bills passed before the AAA rating, it was done very last minute. And then now this year that's gone on for weeks. I think yesterday was supposed to be the final day. It's supposed to be done, and again it's delayed. I think it's been the final day twice. Then we look at recently the European banks and financial institutions may be getting downgraded by Moody's. That's 17 big name banks and another 117, I think, financial institutions across Europe. You look at economies like Ireland, Portugal, Spain, Italy. They're not so good. They're showing difficulties in managing a country, managing their economy, difficulties managing the bailout they've been given. Even Ireland's economy, the politicians were corrupt before the crisis, and a lot of people wanted change. They wanted to see differences, but so far we haven't seen too much. And then you look at China. China claims that. Sorry, hold on one second. There's a weakness in China, the possible growth slowdown, unemployment rate rising. The unemployment rate figures they give, I think, are completely different from what they actually are. I know for a fact that in Korea, the unemployment rate is 4% higher than the unemployment rate they actually say it is. And then the whole Chinese undervaluating their currency to win one over on the US so they can have cheaper exports, whereas the US exports are much more expensive because of the whole currency issue.
Yeah, that makes sense. It's just that I'm not. I agree that a correction's probably coming soon, but I'm not ready to step in front of a 1,355-ton freight train. I'm not gonna load up on shorts until the market confirms itself. I added to all my long positions yesterday because we've been trading inside this range, and I figured we were moving up higher, and we made new highs today.
Yeah, and by the time that 1,355-pound freight train gets to you, it'll be 1,380 pounds.
That's right. Then we'll start talking correction when we see the selling volume, which we haven't seen in the last week or so.
Yeah. If you look at the VIX or the TVIX, you look at the crazy moves in this thing. It shot up like crazy, and I think what it was, everyone was expecting a pullback, and everybody was hedging. And this is what Cousin Vinny's I think both Cousin Vinny and Johnny We're both thinking because the market was going up and the VIX was as well at certain points. They weren't coupled together directly like they normally are. And I think everybody's expected a pullback before now, but if you look at the VIX, it tanked today when the market shot up. It's like all that pressure just went away, like everybody's happy now. No more volatility. Go long. The whole thing just confuses me.
Well, I think the markets, the FTSE, for example, is trading at 70% of normal volume over the last year, and the lack of volume is driving up prices. And now one of two things are going to happen. The markets are either going to crash off massively, and it's going to happen quite fast because it's a big issue. There's a lot of news out there. It is news dependent for the crash off, but if you try and get in after the news, I think you're going to be too late. And then if everybody keeps buying the market up, theoretically people could keep the market at this price through bad news until good news comes back again, and then start trading it up. And I think that's what's happening. I think people are continuing to keep the market up through the bad news, but it means when the good news comes out, there's limited gains. It's not going to go up much further. I'd say maybe 200 points on the FTSE, which is, if I try and work it out, 200.
So you don't think that's kind of what's happening now, because we're starting to get a lot better news, at least over the last 6 months or so. I mean, yeah, the market's been going up, but do you feel like maybe today was like one of those final pushes? Do you think we're going to climb much higher, or what do you think?
Well, I think there's a limit of 40 points to the markets going high, with the downside of maybe 200 on the ASU1. But with the markets going higher, yeah, it's possible. If people keep breaking highs, I think it's going to be ridiculous. I think it's going to be slightly ignorant. Yeah, it's great. Bull markets are good fun, but we could keep buying up. But then once the bad news comes, if the bad news comes, then it's going to crash hard, and a lot of people are going to be caught going the wrong way.
Right. So where do we stand right now? I know I'm a little out of things. Today I was left early, and where do we stand right now with the debt crisis in Europe and Greece and all that? Where is it? I mean, is there any solution yet, or is the market still waiting for final say on what's going to happen, or are we factoring in good news or a resolution? Is that what's happening now? What's your opinion on that?
Well, we're buying the rumor that it is good news, but we're buying the rumor, selling the fact. So if good news does come out, the markets won't move too much. If bad news comes out, then everybody will be selling the fact. They've already anticipated the good news and bought up the markets.
Right.
Yeah, with regards to the European debt situation, the markets could fall heavily if negative news on Greece comes out. On top of that, UK faces a second recession if the next quarter of GDP is low again. Mm-hmm. So that would put them back in the UK economy back into recession. And that's quite a big economy. It's a tie to Europe and America. It also has heavy ties with China.
Yeah.
European banks are at risk to Greek bonds, so that's the main issue. You'll see all these delays, and you've all probably heard about the ongoing delays. I think the reasons for this is a lot of European ministers don't want to give Greece the loan. If they give Greece the loan, yes, it helps the Greek economy, and they will eventually pay back the banks. If they don't give Greece the loan, they can give the bailout straight to their banks that need it and cut Greece out. It's like saying, Greece, you did something stupid, we're cutting you out. But the fact is, it's going to be inhumane, because the economy of Greece will be a complete catastrophe. And we've already seen rioting where 100 buildings were just wrecked and set on fire in one day, and that was the last time votes were held, not a couple of days ago. So you can imagine if they default, it'll be much worse. Obviously, is what I'm saying is Europe does not want to make it look like they're the bad guys. So they've been trying to make it look almost like Greece isn't going to be able to, perform the austerity measures. So, Greece signed the bailout agreement, and Europe comes out with, they have to get another 320 million. Kind of ridiculous, to be arguing over that amount of money. The US economy's had some seriously good figures. Economy unemployment today as well. It's been better than expected by 16,000, I think. But the problem is they're tied quite heavily in with negative news on the European debt situation, because a lot of economies in the world, maybe 30% of their GDP would be export, 30% import, and the rest would be from taxes. So if Europe falls, nobody's going to be buying these American products. Nobody's going to be buying Chinese products. So China will fall, America will fall. It'll be a really big disaster. So the markets do have the potential to crash with huge implications, because Europe isn't just one country. If one country crashes, there's others around to buy it up. Europe is one of the three major components to this capitalist system. And if they go, that's a lot of buying power that'll just have vanished.
What do you think, Learjet?
Can you guys hear me? I'm having some internet connectivity problems.
You sound great.
Okay. Is it my turn?
Yep. Go.
Sorry about that.
Okay. No offense to our friends from Ireland, but I'm so sick of hearing about all the Euro debt crisis in Greece specifically that I just don't care. I couldn't care anymore. The ES made new highs in its range it's been trading in since the beginning of the month. There's been no major selling volume. Every dip has been bought. 1338 has been huge support. The bulls have protected it every time, and I'm not going to listen to the noise and get afraid because of CNBC or Fox News or Twitter. And I'm going to just, trade the tape as I see it and continue to make money to the long side until the market says so otherwise.
Okay, so we've established that Learjet is long and Jaymes42 is short.
You can say that, yeah.
Yeah.
And I'll be the first to say you have to stay agile and turn bearish on a dime, but until the market confirms downtrend and has that major selling volume, I'm not going to worry about Greece or Euro debt because it just doesn't matter to me.
Yeah, I saw a couple of shows last week. They were talking about, though, that the banks over there are tied with a lot of the U.S. banks. And they said that if it would really go badly over there, that it could take out a third of our banking system here in the United States. Now, there were some people on the same show that were arguing that would not happen. But there was some supporting evidence that could very well be the case. That if they do not find a solution over there, that it could cause serious problems here. But here's the thing, I'm wondering, what do we really need banks for if nobody's borrowing money? And if the banks won't lend any money, and nobody's borrowing money, what do we need banks for? I mean, the banks aren't really what. I mean, I know, we need banks, and I know the market will crash, as soon as banks start, going belly up. I know that, but as far as to sustain the economy, I mean, we've basically been sustaining our economy without the banks loaning money. Remember the whole debt crisis thing, and there was no money, and the banks can't loan any money. We're out. We got to do all these bailouts, all this stuff that happened back 2 years ago, 3 years ago, whatever. Well, we supposedly we fixed that, but banks really aren't lending money now. They just tightened up on their lending practices. You have to walk on water now to get a loan. Businesses have figured out ways to continue. Strong businesses have figured out a way to continue, and weak businesses filed bankruptcy. So it's like, and they keep driving interest rates lower and lower and lower, and people still are having a hard time borrowing money. And so the whole thing is just extremely confusing to me. And I do know, though, that a lot of people are saying that we are tied to the, U.S. is tied to the European banking system a lot more than people are willing to admit. So I think I mean, I know that you're sick of hearing about it. I am too, but I think it will have an impact if the news were, like James is saying, if the news is expected to be good as a solution that's beneficial to everyone, keep things going as the way they are, and that news were to come out in a negative way to where there's trouble and things aren't going to happen, I think the market really could pull back, just simply based on the fact that it's had a nice run up, So I think it would sell off hard,
Right. Well, my only point is that I'm not going to worry about having to load up on shorts and hedging myself until the market confirms itself to the downside. Until we get that major selling volume, I'm not going to start calling tops and hope that the market pulls back. I'm going to trade the tape and until it confirms otherwise.
I'm just going to ask a question to the chat room here. For the elections, Rogue Trade pointed out that they won't crash till after the election, and that is a good point, because maybe these markets are being held up with good news so that people can be re-elected and people still have faith in their government. But can people in the chat room just maybe give out who they think should stay in government, maybe, if you're okay with saying who you would vote for, like whether it would be Obama for a second term or his next. Do you think somebody else should come in and take over?
We're going to cause a war now.
Yeah. Because I think with all this new strong data, it's sort of like, hey, Obama's done something good, but how much of that data is cooked? When you see unemployment figures, those figures actually come from people who are actually looking for jobs. They don't come from people who are in education. They don't come from people who are retired. They don't come from people who are not looking for work. With the fact that over the last 2 years there's been so much little work, people who maybe don't have the best qualifications in the world are saying, hey, there's not even a point, and they stop trying. How many people have stopped trying? Could another 2% be added onto that unemployment data?
No, it's a lot worse than that, man. Oh, I mean, yeah. I have 100. If I have 100 friends, 10 of them if I have 100 friends that are out of work, I guarantee you 20 of them have given up.
Yeah, exactly.
So there's somebody there. Let's say in there, is that Tim Zola? Tom Zola, whatever. Says there is all the money in the world to lend, but no one wants to borrow the money. No one's borrowing any money because every asset except for stocks are falling in price. The interest rates are going lower. He's a good point. I mean, nobody wants to borrow money and expand their businesses. For whatever reason, everybody's same thing with real estate. People are not buying homes because they think the prices are going to be cheaper, which inevitably causes the prices of the homes to go cheaper because no one's buying them, and you wind up with more supply than you do demand, and that's just the way economics work, right? Same thing, unfortunately, happens with all types of products and services. And things get stagnant when people won't buy anymore, and they have no reason. They don't have any reason to spend their money or buy those products and services. They have no reason to borrow money, to do that. And then when the people that really do need to borrow money have to be able to walk on water to even get the loan, because the banks are being very stingy. I think with loan. At least that's the way it used to be. I think that's still a problem now. But even with all the money in the world to loan, there's nobody taking them up on it, it seems. At least that's what I think. I mean, maybe I'm wrong here. You guys correct me if I'm wrong, but that's the way. I think we're in a situation where it's going to be extremely hard to fix things because we can't do. It's either going to have things are going to have to turn around and work themselves out in very slowly but steadily, or it's not going to work, and we're going to have a serious crisis in the future. Either we're going to really work our way out of it and things are gradually going to get better like they seem to be, or we're going to tip over and things are going to get really bad.
Well, one method of getting better is one method of getting better is by having a stronger currency. Thus, you can have better exports. Not too strong though, like Switzerland's, because they're having real trouble because nobody wants to buy from them. But how one goes about increasing their, improving their currency is by improving their economy size. Now, if you trade completely independent with your economy, you'll never increase in size. This money needs to come from other countries. It's a capitalist system. Like, I'm a capitalist, love to hate it, but one economy will reduce with the amount of money running through their system as another increases, because maybe more people go to that country under tourism conditions, or they buy more from that country rather than from their own country. Like stuff like Yahoo has, sort of fixed stuff to come from a certain country. People go on the internet rather than down to their local shops. So as their economy value increases, they can change their currency, and to increase the economy value, you need to be investing in foreign markets, and that's one of the problems right now, because they invested in a lot of European banks invested in Greece, and if Greece goes down, they don't pay back that money. And again, this brings up the reason to why Europe would prefer to cut Greece out of the equation completely and just use the bailout for their own banks, because if Greece fails again, then we're really, F-bombed, we're really screwed. America will be really screwed then. They'll get scared. People will realize they need Europe. Europe doesn't need Greece, but they don't want to reject them flat out.
And, as the currencies, you said the currencies need to be stronger. Well, as the currencies get stronger, then that pulls money out of the equities markets. The stock market goes lower usually when that happens, right?
There's a fine line. Like if a currency gets too strong, then it starts being weak. Just like if an economy is prices are, if the economy's inflation rate's going up, it's bad. But if it's deflating too much, it's also going bad. You've got to have a fine line you need to be on, and a country needs to get its currency at a certain position to be healthy.
Yeah.
I've got a.
Go ahead,
I've got a screen share. If you want, I can screen share my. I'm happy to show my portfolio from the start of February. One of my portfolios, my macroeconomics fundamental portfolio.
You want to do a screen share in Skype?
Yeah, I'll Skype it.
All right. You ready for this, Learjet?
Let's have it.
Learjet, you going to the party?
I will not be at the party, though. I will see you all in Vegas in November, where it's warmer.
I've never been to Vegas. Didn't make it last year either.
I don't do so well in the cold.
Well,
I'll come to Vegas if Learjet picks me up.
Hey, I'll do that.
Do you have a plane? Do you have a plane?
I'll
I know
find a
Learjet
plane.
flies.
He'll find a plane.
I'll find us a plane. Don't have one. Doesn't matter, though. I know how they all start.
Yeah.
Can you fly helicopters? There's a lot of helicopters in Ireland.
Not well.
Have you? But you've tried.
I have done it, and I didn't crash, but it didn't go so well.
Did you return the helicopter?
In one piece.
Yeah. Did they arrest you?
No. The best way I can try to describe flying a helicopter is like trying to stand on a basketball. If you can stand on a basketball, you can fly a helicopter.
I hear you.
Hold on. Emmett wants to show video. Do I want to accept that? I don't know
you
what's going
can.
on.
Sure.
All right, then.
Here's his bragging pages.
Okay.
Did you want to put it up as well there?
It's on. It's up now. It just takes a few seconds for everybody to see it.
Yeah.
All right. portfolio. All right. Take it over.
Can you see that clear?
Mm-hmm.
Yeah.
Yep.
Okay. Right. Here's my portfolio. This is actually, I'm not going to show my whole portfolio, but this is one of my many trading techniques. Like I said, I go for different ones. This would be the global macroeconomic fundamental portfolio, and this is just a quick overview. So we'll go down to page 2 here, where we start off with indices. So let me just talk you through how I work. I like to take a global approach. I like to look at the first I would look at the US, Europe, and then Asia. I look at which economies are doing well over the last 3 months, over the last 1 month, and over the last week. I look at all their sort of fundamentals like exports, imports, GDP, unemployment, you name it, I do it. I look at all this stuff. I find the strongest economies, like with the US, I would go straight to finding the strongest indices to trade on. With Europe, I would find countries like Germany, France, and then for more high risk trades, I would go to countries like Spain, because I would give them classes of risk assessment. So then I would have a list of countries or economies, their risk rating beside it, done by me, and then I can sort of go into that. So I'm like, oh, that's only maybe a small risk, so I go into this economy, and then what I do is I do pretty much the same thing with sectors. I look at the strongest sector. What's a really good way to do this is, I think DTRS, Johnny, has shown this a lot. It's FinViz. You get this sector heat map, and you can look at that from a day to a week to 3 months, longer, I think. I draw up my own, but that's a really good one. It's pretty much just as good as drawing up your own. Better because it saves you a load of time. I find the strongest sectors. Once I find that sector, let's say the technology sector would be the strongest, with the financial sector being the most volatile. I'll look for the top stocks in that sector. Then I will look for the fundamentally worst stocks in that sector, and then I'll place trades accordingly. So I'll go through this now on just what I do. So first off, I picked. Also, I hedge everything perfectly. I like to stay market neutral when the economy's like this. Preferably it'd be a bit more downside, because if the markets crash off, I'd want to make gains off that and be happy to make small losses until the market's going up. But I'm market neutral. First off, we've got the S&P 500. This is from start of February. Long strength in US breakout of 1306, which I think I said to one of your traders. 1306 was a really tight resistance point. So if that broke, there was going to be a change in things. And actually, I think the day it broke, the day after it broke, it was up to 1320. So a lot of strength in S&P. I'll take a hedge against Europe with that. So I've taken the Euro stocks. Sorry, that is the Euro stocks 50. The Euro stocks 50 I will short due to the European debt situation. So if the markets are to continue on up, the US is going to do much better. If the market's going to go down, the strength with the US economy will hold it up a bit longer. It'll grind down slightly slower, so you should make more money on the European stock market crashing faster. So technically, if it goes up, you'll always be losing on one trade, always be making on one trade. But the way it works is, you're long on the S&P 500 will make more going up than you'll lose on the Euro stocks 50 going up, and then the market's going down, vice versa. I've picked the Shanghai versus the Hang Seng, just because again they're tied into this news on the European situation. Also, there's a lot of PMI data in China. Back start of February, I was expecting it to be worse again. I think it was better above 50, and 50 is a key level. Above 50 on PMI shows an expanding economy. Also, the unemployment rate in China I don't like, so I picked the Hang Seng to short, because if the Shanghai is quite strong, if the markets are going down, the Shanghai would act more defensively.
I have a question. Would you short the Hang Seng index then, or would you pick like the Hang Seng market leaders and short the individual stocks?
For this one, this is a short on the Hang Seng index, but what you could do rather than short the Hang Seng and long the Shanghai, go to the Hang Seng and short the fundamentally worst stocks on that, and long the fundamentally best stocks, which I've done later down the list. I will show you. This just goes on about what I spoke about earlier about the European economy. Basically the reasons why I'm taking these trades. If you just want to screenshot that, you're just gonna have a read over it. I'll leave it there for 5 seconds.
Yeah, I just want to mention I got Stock Bandit in the room saying he's not getting any sound. I just want to ask, for those that can hear me out there, can you just put a 1 in the chat room? I just want to make sure that we got audio, everybody can hear. If you guys just join us, RPM, of course, and this is Thursday, February 16th, 2012. We're doing a Trader Spotlight Live, and it's right here about 20 minutes after 10 p.m. Eastern Standard Time. And this is being recorded, guys. And we've got Jaymes42 on here from Ireland, and we got Learjet standing by asking questions as well. And it looks like everybody can hear us. Cool. Sorry about that, James. Go ahead.
I wrote down a special note here. Markets have a lot of negative news in the air, so approach trades with caution. Either not trading at all or making your portfolio market neutral, which right now I'm going to suggest to you all is what I'm doing and what is the best approach in this market, because if the markets go, I know a lot of you are for the bull market, but if the markets go bear, a lot of you will be cut out, and you're talking maybe losing 15-20% of your portfolio size, maybe more. With shares, they can go down quite a lot in percentage. So being hedged, preferably in these markets where it's completely news independent, is the best way to go forward. Stocks with an index hedge, I've picked the UK bank sector as a whole. I think they're very volatile. They seem to be the ones driving the FTSE the most. If this Greek bailout gets passed, which I think a lot of people are expecting, they should get a good bump. They have got a good bump over the last 2 weeks. The FTSE short has been going up, so I've been losing money on that, but I've been making more money, like I said, on the banks going up. I short the Eurostox 50 again, so this is a second short. I would double the position size, considering I already have it hedged against something. And then I would long the Eurostox 600 banks. Again, this is all about the Greek bailout. An oil play with the whole Iran situation. I took BMW for a short, and hedged with a long for WTI. I think that's Western Texas. It's an oil company. I think maybe some of you are familiar with it. I know the majority of you are mostly familiar with the commodity crude, but Western Texas would be a company on the New York Stock Exchange. This next one here was Google had an acquisition of Motorola Mobility. There was talks about it. So I longed Google, WPP. I decided to take a short in that because it was a good hedge. This news directly affected them. If Google was, tying up with a partner, it kind of scared WPP a bit. So again, another hedge where if the markets, and I'm talking the index, is going down, Google shall still show strengths due to the news, whereas WPP, being in negative news already, should go down further. If the markets are going to go up, Google, having the good news, will go up, whereas WPP should either not go up much or still be going down. So this is irrelevant of what type of market we're in. If the market's bad or good, you still make money in all these trades. And I think this is the style people should be trading on. And this is the style the majority of professionals trade on. because it is probably the only way to make money in economies like these. It's not the only way, but it's probably one of the safest ways. Defensive stocks. These are stocks I've picked again against my shorts on the markets. I had a short in one account on the S&P 500, but that was hedged against these defensive stocks. Defensive stocks are stocks that grind up slowly, but when the markets are going down, they tend to either continue grinding up slowly or come down very, very little. So that's hence the name defensive. They're a good hedge. So you should still be making money if you're losing money on your short on an index. I've got Tesco's NRG in the US, CA and SAN. They are both on the French exchange. I think Santa Fe. I'm not sure. I can't remember what they are, but if you check out Google Finance, CA Charlie Alpha on the EPA, Echo Papa Alpha, and SAN, that's Sugar Alpha November on the EPA again. You should see what they are. So I've shorted CA, longed SAN. This next one is a nice spread bet. I just had to take a short on Abercrombie and Fitch. I'm not sure whether that's can someone reconfirm the ticker for Abercrombie and Fitch? Is it ANF or ABF?
ANF.
Yeah, I think it's ANF. Yes,
ANF, yeah.
Yeah. I think ABF is AB Foods. But no, ANF, short on Abercrombie and Fitch with Riverbed, RVBD, both on the US, long and short, since February. I just thought they'd be a nice sort of spread bet. Nice. One shows a lot of strength, one shows a lot of weakness for a turnaround. So those are the reasons I took that. Market rumors, BBH on the German exchange. Takeover chatter, so I'm playing a long play on that. I don't have a hedge because I think I'm pretty hedged with market in the indices as it is. So I've also got in other section Vodafone, Shanks, and DVW, which is D Valley Waters. Yes, that's right. D Valley Waters. It's a water company. These are three longs I took. Again, proving to do extremely well. Mostly because the markets are doing well, but if the markets were going down, they'd be very defensive. On the Forex, I'm US dollar long against the Hong Kong dollar, US dollar long against the yen, US dollar long against the euro. These ones are all because there's a lot of strength in the US, weakness in Europe and China. I think it's ticking time bomb. There's still a bit of weakness with it. A lot of debate going on about, I think last year, about the US doing something about their currency being so undervalued. So I took that there. Euro versus Switzerland, the Swiss franc, because although I find the euro quite weak, I think the Swiss is too high compared to the euro. If this news of Greece comes out, the euro should go up and the Swiss should come down to get at better levels. They're currently too high for people to go over there on holiday, so it demotes tourism and people don't want to buy from their country because things are just far too expensive. Commodities, I'm long gold, short copper. I'm long gold just because if the markets did crash off, I think there's 30%, markets are still trading 30% less than normal, so the money's probably going in somewhere like gold. I take short copper just as a hedge, not because not too much else, maybe just slowdown in demand in China, but I think recent news demand might have increased, so it might have been one that didn't work out, but the gold has gone up a bit, so it's covered. Long soybean, short wheat, I would prefer to have them both long, but I couldn't think of a hedge for the soybean or the wheat, so I just longed one, shorted the other. Crude long. I've been long crude since some early January, again due to this news with Iran. I just, it's driving the price up. I think I made a call a long time ago that it might go up to 200 a barrel, 250. If it gets really serious. I entered first around the $100 mark, and then I just saw for the kicks, short orange juice commodity. Market neutral. This is my favorite portfolio. This is a algorithm I set up to find. It takes into account certain different factors. It finds the best stocks in the globe, fundamentally, companies that are doing well internally. Not really so much looking at external factors. Try and stick to countries that have good external factors. So a lot of these will be in France, London or Germany, and not countries like Spain or Ireland, Portugal or Italy. So I've longed, a lot of these: Billiton, Standard Chartered, Volkswagen, Carlsberg, Rio Tinto, ML, I can't remember the name, BP, British Petroleum. I think that's right. Is that British Petroleum, guys? BP?
Good question.
That's the company that had the oil spill last year.
Yeah. What's the ticker for BP, everybody?
Just BP, Bravo, Papa.
Yeah, that's it.
Yeah, British Petroleum. KGAF, that's Kingfisher. A lot of these are on the London Stock Exchange because it would be my local, but I've got a few on the French, one or two on the American, and then some other stronger economies in Europe. It's Kingfisher, AH, that would be Ahold, on the AMS, RWE, that would be, I'm not sure, you guys can look it up. These are the strong companies. I usually like to find 50 of these. I have my algorithm set up to find a lot of them. I'm not going to throw them all out there because I don't want my whole portfolio shown to the whole world just yet. But yeah, these are 10 and 10, I think, or 10 and 9. But you should do equal numbers. These are very strong longs. They tend to go up, 3% when the market's moving high, and when the market's going down, maybe only go up 1%. Still, you get some going up maybe 2%, and then some in the minus -1%. The shorts are BATs. I think that's maybe a tobacco company, British American Tobacco. CRH, it's gone for me. Sorry, I've forgotten. TLW, Tullow, it's an oil company. EXPE, Expedia. Exchange. Back, German company.
James, I have to say,
Yep.
Learjet, was that you typing or was that James?
Sorry, that was me.
Oh, you were drowning out James.
Sorry.
That's all right. I was going to just say, James, this is the most sophisticated portfolio I've ever seen.
Yeah, and this is just one of my many portfolios.
So
it's a very technical portfolio that works very well with an economy like this, because if the markets are going up, you're making money. If the market's going down, even if the market's crashed down 700 points on the FTSE tomorrow, your shorts will open up, maybe in the negative 10, 15%, whereas your longs will open negative, 5, 7%. So you're still making money. Either way the market goes, this is one of my favorite trades. If I want to go on holiday, I'll run maybe 50 of these. Market neutral, so I don't even have to look at it. Maybe check in once a week, change a few out to check the algorithm.
So I mean, we've had a couple people send me private messages. People want to know what are you comfortable with sharing what type of how many assets you have in this thing? This is a lot of positions. I mean, are we talking about $50 million here? Are we talking about $1 million? I mean, what do we? Just give us some idea, because obviously it looks like you've put a lot of thought in your trading plan.
No, I don't trade. Currently, I can't do the portfolio limitations, but I can't trade above. Hold on 1 second. I'm trying to find something. I can't trade above 2.5 million. That's what I'm used to, 2.5 million. Mm-hmm. I've always thought about quitting and moving to a company where I can control a portfolio of maybe 50 million.
Right.
A friend who controlled a portfolio of maybe, he was famous for controlling one of the highest portfolios of Goldman Sachs. I think it was 500 million. And, I think, my portfolio is designed for having a mass amount of money. I mean, if you take let's say you take 10 grand and you try to divide, I think there's 49 or 50 stocks here. You try to divide that between 49, 50 stocks. Even if you leverage it, you're going to have to be looking for 10, 15% moves.
Yeah, the amount of commissions just getting a little piece of every single one of these trades would be outrageous. I mean, it would probably be $10,000 right there.
You'd make 5% on every trade and still be losing due to the commissions.
Right, and there's Ron in the room there a few minutes ago asked, is your portfolio equally weighted or varied percentages, and how do you determine how much for each pick? We covered that a little bit at the beginning of the show, but if you wanted to go back over those in general percentages that you mentioned earlier, he'd probably appreciate that.
Yeah, I don't know if this is equally weighted. Like I said, this is just one of my portfolios. And this is my portfolio that focuses on macro, that's GMEF, global macro economic fundamentals. Whereas, I still do day trades on stuff like ESU1, day trades on stocks I hear, on last minute news. This is something I commit to for maybe 1 month before changing a few things about. And during that month, I'll cut a few positions that aren't making money, or take profits on positions that are making money. But if I was, let's say, we're over gold, and that's not a good example. Sorry. Let's say we go down to these two here, RWE and BATS. If BATS is losing it isn't working out, and the company's losing more than I'm gaining, then I cut that position. And then I will also cut the long position, so the account will stay pretty much balanced. On a market neutral trade, you have the exact same investments, long as short, with the same sort of investment sides with each hedge, and each hedge would have something like one stock like Bulletin would be versus BATS, BATS. So when you take one off, the other one comes off. With the stuff above, I've pretty much equaled it. You can see here blue, red, blue, red, blue, red, but there's some where there's more blues. Either I'll have an opinion that the markets are going to rally, so I'll stay a bit long for maybe a day or two before taking them off again. I'm making money on the shorts on the way back down. Or let's see, or other accounts will be balancing it somewhere else. And then when you see something like this here, the S&P 500, just the one long, I might have a lot of value in that. Go ahead.
Hey, Johnny Cash there says he's been out of the site for a couple of years, maybe. Do see he's an active member now. Welcome back there, Johnny Cash. Has a question, and the question was, what would be a good year percentage-wise for your gains? What would you consider as a good year? I guess you'd have to, since you've only been trading about 3 or 4 years, so we've got this very skewed, strange market that we've had really in the last couple of years. So I guess your expectations might be a little bit higher than the average person that's been trading 25, 30 years, I guess, right?
The problem with people who were trading before me was they traded into a bear market, which nobody expected, whereas I came fresh at the lows of 2009, and that's where I made a lot of my money. Now, as that changed and the market started changing into where they just started moving up and down, sort of in a sideways pattern, I had to change my techniques from old bull to something like this. Over the last 3-4 years, my whole I've learned a lot, and you will always still be learning, but I'm pretty much, I think, at the stage of my career where I've got a perfect system that I like to run. But of course, as markets change with new technology, you will have to change. But my perfect year was probably 2009 when I first got in, because everything was just so cheap. I mean, I think I had 95% of my picks were going up, and while some people could have picked the exact same trades as me, the exact same days, and lost all their portfolio because of the way they handled it. Like I held a lot of it, for a month. You'd see your value go down for maybe 2-3% in a trade before it goes up 10%, or it would go down 10% in a trade because prices were so cheap, it was so volatile. Like for example, Ford, you said it went down to 10% from $2 to $1.80. I would say, stuff like that there.
Yeah, it went to $1.08.
Yeah, $1.08. Yeah,
yeah.
Worse.
It cut in half that day, and then it did a V bounce right back up to like 180.
You just lost half of your trade there, but then it went up to $20. If you held until $20, you're making what, 1,000% on that trade.
So right, did you? So basically, back then you went in as an investor. Basically, right? You went in saying these stocks are cheap, this market is going to go back up again, and I'm going to hold on to a lot of this for a really good while. And you got enough cushion under you where you had lots of gains. You just decided to hold on for a long period of time, I'm assuming, right?
Well, when I started off, I never leveraged my accounts because I didn't know about CFDs at the time. I just traded shares, and I'd buy something, so the value could literally go to zero before I'm put out. And I just held. There were some times where I did a bit of day trading, but I never really got into day trading, and I never really learned the aspect of day trading until I started coming on to day trading radio.
Right.
And that's when I started talking with people, and it was a really nice community. You're with people. And I just started day trading more and more and implementing that into my portfolio. There were times where, I day trade 50% of my portfolio, and I had to start changing my pattern again all the way up till I got this for the last 4 years, because I was overweight in just day trading. And, if you have a bad day, then you lose. If you're 50% of your portfolio, you're risking 50% of your portfolio.
Right.
But 2009 was a great year. I had studied economics and business to pretty much a degree level on my own. I was too young for university at this stage. I just had a major interest in stocks. So, I read the paper every week, and I kind of had the opinion you'd buy something and you'd make $1 million in a matter of a fortnight. I was a bit foolish, but as a child, I wanted to be. I think all young kids want to be rich. So I wanted to sort of. I had that sort of, I want to be a millionaire. I want to be a millionaire. Blah blah blah. But that's probably the drive that put me towards the financial markets. And then I started realizing that the pound, the sterling, Great British pound, was £1 to $1.9. And I've said this before on the site. That's when I made one of my major moves. I invested a lot of my money. I started buying up the dollar, and then when I sort of was predicting the market to crash, I didn't expect it to be as bad as it was, and so I made a lot of profit on that. Maybe I think it was 70% profit on that trade when the dollar crashed, and I was only looking for maybe it to crash to back down from 1.9. 1 pound to 1.9 to 1 pound to 1.5, but it went as low as 1.3 or 1.25, I think, in the very beginning. And that's when I sort of gained in and then realized, I should start getting into trading. So I tried my shot at university, but I really became a full-time trader and decided to quit university after a spiff with my lecturer. I kind of said, I'd grown cocky from this trade on the euro and predicting the downfall in the markets, and what I was predicting next, huge growth for the next year. And I was called foolish and said, do you want to teach the class? Do you want to teach the class? So I said, yeah. I came in the next day with preparation to teach the class, and she was quite offended, and so I got kicked out.
Good for you.
Yeah, but I became full-time trader, and
right.
This is what I wanted to do.
Well, good, man. Well, you're very sophisticated. How do you manage all this? I mean, I'm thinking you're 22 years old. I mean, you seem to have a knack for this. We had Ron in the room ask another question. How many monitors do you use in your computer setup?
You only need 2 monitors, people. Actually, you only need 1 monitor and 1 TV. I use 4 monitors because I do have such an advanced scenario, but most of that is for when I'm doing research, and it's just easier not to move about, to hover over and open different things. Just have lots of different things open. But what happens most of the time is I might have maybe Facebook up or some music, YouTube up, so I can play some songs while I'm working. But you need, I'd say, 2 monitors is the perfect amount. You see people with, you watch the TV and you see people on Wall Street with 4, 8 monitors. This is because they're on TV and they want to look good in front of their friends. Wow, we're doing this, but they're trading with their company's money on the first 2 monitors. The rest of the monitors are for their clients. Now, you're just one person. Unless you've got clients, you don't need more than 2 monitors. Yes, it helps, but I advise, don't go out of your way to buy equipment because it will not make you a better trader. It's nice to have. If you're out doing well in your trading, you can reward yourself, get an extra monitor. But a good trader doesn't rely on equipment. It won't make you any better. You have to do that yourself.
Yeah, I definitely agree with you there. 15 monitors doesn't make me a better trader.
No. Overcompensating there, I think.
Well, a good 6 of them are just for doing the shows, probably. You have to keep your eye on things. But
well, you're running a lot of programs, so you kind of have to. You're hosting a radio show, I mean.
Yeah, there's Barker there saying, are you trading with your own money or are you managing others?
I'll answer the way I would answer in court. I'm trading with my own money.
Okay.
I've taken money from my friends. It's legal. Like if they give me money, they can say, here's some money. I trade for them.
Right.
Nowadays they're not so impressed. Because I say, okay, I'll make you, so much percentage on your portfolio a year, and they're like, what? This is far better than you would get having it in a bank, maybe 10 times better than leaving it in a bank. But I think it was 2009, I took £200 off a friend and gave him $3,000 back 6 months later. And now a lot of my friends, they really got the, wow, you can make us, 15 times our money. But that was in a different market. That was when the markets were dirt cheap, like, all these companies, all these quality companies like Ford, like we said before, were $2 or got as low as $1 and went all the way back up when the economy sort of healed itself. And the economy actually went up too far, and there was a correction in 2010. And I think we'll see a correction this year.
Well, and you got plenty of time for 2012 for a correction, so.
Oh yeah, definitely.
And I think. I mean, do you think we'll go that much higher? Do you expect us to go that much higher before we start to see that correction, or do you think we're already in that correction phase now? We're just starting to top.
No, I've been hoping it would be going lower since 3% ago in the market value.
Mm-hmm.
but your guess is as good as mine. I mean, the reason I'm making money is because my system is perfectly hedged in a way that it makes money whether it goes up or down. So I don't need to know the news exactly. Like if I wanna make those bigger gains, it helps looking into companies and trying to predict what will happen. Like Baidu, DTRs didn't take it, which was a smart move. I don't believe in holding into earnings, but a strong company like Baidu, I didn't take it, but I had expectations it would be above earnings. And companies like Apple's, you would hold into earnings, but with the markets right now, this week, with the last month, I haven't been able to predict squat. I just think, on day trades, I'm doing fine on day trades. I take the advantage in hours where there's no news at all. Using technical analysis, what I've just shown you is all fundamental analysis. There's a side of me that just deals with technical analysis.
Do you want to get into any technicals?
Yeah, I'll go in technicals in a minute.
Okay.
But the markets, they could rally maybe 200 points. On the 50 points on the ESU1, 200 points on the FTSE. If they go above 6,100 on the FTSE, then I've started to be, maybe people are going to try and rally this thing up to 6,500, which is maybe 10% higher than where they are now. But I'm preferably downside. I think that the markets will go downside, but it could be tomorrow, it could be in a month's time, it could be in 6 months. But I have my portfolio set up, so I'm pretty market neutral. I'm not full bear, I'm not full bull. I'll say I'm full bear because I like the idea of things going down, and I will predict it to go down, but I will still be making money if it goes up.
There's Johnny Cash there asking how much time do you put into researching a particular company?
It's 4 a.m. here, and I normally stay up pretty late at night researching. The FTSE 100 closes at 4:30, and there'll be days where I get up at 7 a.m. To get ready for the FTSE, and I will continue trading on in at 2:30 here. The American market's open, and they don't close till 9 o'clock here, so I can trade from 8 a.m. in the morning till 9 o'clock at night. Then I can be very tired. I fall asleep sometimes at 7 o'clock at the trading desk because it takes a lot out of you. But I try to get a couple of hours in after work, and sometimes I get up at 3 a.m. or 5 a.m. to get a couple of hours in before work. That's usually on normal, but because there's so much news coming out, I like to get a couple of hours in before the start of the day, and prefer to quit the markets early, which I've done the last week. I've maybe stopped at maybe 5 o'clock, which is about midday your time. So I'm leaving your markets pretty early, but I put my effort in on the FTSE. And again, a lot of this trade can work while I'm not there. Once a week, I will do an overall valuation of my positions. I will look for new positions, and then once a month, I will do something like this here, where I take a whole global approach, and that could take 3 days of work. So as soon as Friday starts, I can be working. So 1 week a month, I'm rushed off my feet. It's very hard work. You have people doing what I do, but they have maybe a 50-man team. I've got a couple of people helping me out, people I'm teaching, students of economics, and some traders working with me. I do the research, and then I can get them to watch the news for me sometimes, or implement the trades. So I just say, you do this for us. A lot of my trading does involve mental stops, where you don't put the stop in, you do it at a certain price, but you give a little leeway, so I have to have people for that if I'm not there. But these are mostly friends of mine, or people I've handpicked from universities just for training purposes, because I'm trying to get into speaking at universities now, just to help young students like myself who didn't have the same sort of same chance that I had. I had, or have the same chance that I have. I had a very little, I didn't go to university, so I just I did this all on my own. So if I go to universities and help teach people, after 4 years of their university, if they have a solid track record with me and have their own personal portfolio going, they can go off to a hedge fund, a firm like Goldman Sachs or or JP Morgan, and get a job, no problem, with their degree and a good track record. But the amount of hours I put into this job are unanimous. I mean, I think I'm 24/7 pretty much. But the bonus of this is I could retire maybe at the age of 30, and then live the rest of my life, trading a lot less, just for the fun almost of trading, because I think there is a good bit of crack being in a community such as the community on Day Trading Radio. Yeah.
I retired at 35, and then I found Day Trading Radio as a hobby, and now I'm addicted to it. So, do you think you could see yourself is there ever a point where you think you have enough money, or do you think you would always be drawn back to trading and being involved in the markets again?
The money for me is like I've made this money all by myself, but the majority of it goes to charity and my family. Wow. Issues with my family where they need money, and then there's things I want to do if I get enough money. There's like one of my dream jobs would be open up a hostel, because I like to travel. I traveled Europe there for 3 months, back in October to the end of December, and it's just I'd love to open up a hostel, really nice hostel, cheap, non-profitable organization. I went to a non-profitable hostel in Bruges, and it was really good because they had excess money at the end of the day that didn't go towards wages, that they ended up buying pizzas and ordering pizzas and giving out a few free beers. So that was kind of cool. But that's one of my dreams, maybe open up a hostel, preferably in this country, although there's probably not a great demand for it, but I kind of love my country.
It's a great movie, by the way.
What?
There was a great movie, by the way, Hostel. I guess you didn't see it.
Have you seen the second one?
No.
I think they brought out a second one. Yeah. Where's that based? Holland, maybe?
Man, this has been pretty amazing. You've been heavy at this for a while. I mean, maybe just a few years, but you've been putting as much as you possibly can into research and figuring out what how you want to take this forward. I mean, this is pretty amazing. It's scary to a lot of people how in depth everything is. You've really put a lot of thought in everything. Someone asked in the chat room earlier, how come you're not in the chat room chatting more? And well, it's pretty obvious. it was back.
I'm talking quite a lot.
You're too busy. You're too busy. Too busy working. There's one little concern there as you put that. I got to actually show in the chat room up on the recording here. So in respect to the people who are in there, and their names and everything, I think maybe we might want to not leave that up for too long, if you don't mind.
No.
But for those out there watching, that's part of the Day Trading Radio chat room right there, and of course it is, but it's right 11 o'clock here Eastern, so that's what you're looking at, and a few people in the chat room there helping us out with the show tonight. And just want to mention, if you guys considering joining Day Trading Radio, we got 2-week free trial, and just come on in, say hello, and no obligation. If you don't like it at the end of 2 weeks, you can always cancel. But James is just one of the many great traders that we have that are members. And did you James, did you want to go into some technical analysis, or maybe some of the basics of the technicals that you look at?
Yeah. I can. Let me just give you an overview. I can run technical trades on their own.
Okay.
Much like TTRS, he throws out technical trades. They're set up. These are pretty much the same indicators that I would use. It doesn't get much more complex than what he does. It's just the way you handle a trade. Like I said, you could be in the same trade as someone, and if there's losses, it's how you handle those losses. Like RPM said, earlier, he kept moving the bar down to where his stop was, because there might be a turnaround, but in most cases, there probably isn't. So you've got to have certain, levels where you have to guarantee a stop, and have to, like, taking a trade where you lose maybe 1 or 2%, depending on what your gains are looking at. You might be looking to lose 0.25% but gaining 1%, or looking to lose 1% gaining 3%. Depending on this, you've got to realize that when you make a loss, if you do it right, it's as good as making a good trade, because you're never going to have consistent good trades. You're always going to have you will always have losses. If you don't have losses, you're either cooking the books, you're getting the books in early. But showing a loss, what preferably you'd have maybe 10 stocks, and 8 of those stocks go up, whereas 2 go wrong. But you don't let those 2 go as far wrong to cut out all the profits from the others, just wrong enough to cut out maybe 2. So 2 go down, they bring out the profits of 2 more, so you make 6 in profit. But yeah, those technicals, if you go into DTRS videos, I think that's one of the places I like to get a lot of my technical data from when I was younger. It's really quite good, wedge patterns, reverse wedge patterns, channel patterns, having your EMAs in, volume. Low volume can make prices more volatile. Sorry, yes, just throwing out a name to Mickey in the chat room. I will post up my tweet account. Yeah, so I can, like I said, I can trade technicals just on their own, like DTRS. But what I also really like to do is the intensive sort of research I told you earlier about the global macroeconomics. What's happening there? About the technical global macroeconomics, I like to. Sorry, this is glitching. With the technical global macroeconomics and fundamentals, when I get down to the sector I find strong companies and then the weak companies, what you can also do is, when you find those strong companies, you don't just get in them, you look at them for a trade. Like if you see 2 of those 3, you pick 3 strong companies in the technology sector in the US economy because it's good, right? You pick the 3, each one is in a channel trend. One's in the middle of a channel trend, one's at the bottom of a channel trend, and one's sort of jumping all over the channel trend. You would take the one at the bottom of the channel trend with a stop, maybe a quarter of the size of the channel under it. That way, you get some leverage for it to break the channel before bouncing back up, and you give yourself a better chance of it working out, because the technicals are there, and then you have a lot of fundamental issues that are there as well, like the company is internally good, their reports have been excellent, they're trading better, they look like they're going to go up, everybody's saying good things about them, and you get a perfect technical setup. That's a trade you want to take, and however, you don't want to just take that alone, because yes, it may be the perfect trade, but it can still go wrong. So when, like you see in this portfolio, I have 50 stocks. If you pick, let's say, 10 stocks, then the majority, with all that research, will be correct, and you will be making money on the majority of those trades. Yes, you will lose 1 or 2, possibly 3 trades. It's down to you on how you lose those trades. You've got to. I think I'll have to go into this another day on the exacts of my stops, because it's a very long process. But it's how you lose those trades that's key. You're making profits on 7, losing on 3, but those 3 could completely wipe out your profits. So,
or 1 could wipe out your profits.
Yeah. It really depends on you to. What I did a couple of years ago was I wrote up a trading plan that it has to meet certain criteria, like so many indicators on the technicals. The fundamentals behind it have to be positive. This was the first approach I took. after I became a technical trader, I put fundamentals on. I said, okay, to make it stronger, I picked the ones who are technically set up and have good fundamental news behind it, so it doesn't go the wrong way, or it's more likely 90% probable to go the right way. So that's like how I trade there.
Do you ever trade options, stock options?
I'm excuse me. Yeah, I'm still I've only been trading for 4 years, and I've focused a lot of that effort to these plans. I do trade bonds, indices, commodities, forex, options, puts and calls and stuff like this. This is something I've never really got into. I'm sure it's a perfect way to trade, but you don't have to do everything to be a good trader. Someone can live their life trading options, and someone can live their life trading fundamentals, and someone can live their life trading technicals. I'm someone who does technicals and fundamentals. Maybe one day if I had bigger, more capital, I would probably throw in options on top of that. But no, for the meantime, I don't trade options.
There are so many people say the reason for trading the options is if you don't have a lot of capital and you get more leverage, you get more, tremendous amount of upside on your potential in your trade and a limited downside. So I mean, you seem like the perfect kind of guy that would be great at options. That's the reason why I asked.
I think options are actually, you've seen my strategy there, where I have blue and reds, longs and shorts. Another way to do this is to take a long and take an option against it, whether it's a call or put, whether you're long or short, and it's just another way to hedge trade.
Right.
Also, one of the things I started doing in my second year was, if I was let's say I just have one stock completely, and I was going long, the trade's fine, perfect. But let's say that I'm investing in the US, which isn't my currency. If their currency gets negative towards my currency, I can be making money on the stock going up, but losing a bit of money on the currency changing. So you can hedge against the currency as well as taking your long. That way, the currency will have no effect whatsoever to your trade. Or you could go the opposite way and make the currency, if it does go in one direction, then you make more on your trade. But again, it has the ability to make you more losses.
There's Learjet saying options are for poor people like him. People with money don't need to fool with options. Well, the one problem with the options is that you have that built-in the options go stale on you. I mean, there's time decay in there, and it seems like to me your trades are more planned out longer term, or at least a large majority of them are.
Yeah, well, I mean, if you're trading for 1 week to a month, options perfectly fine if you're capable of doing them. Trade away with your options. Just again, make sure you go about it the right way. Like if you get on a trade and 2 weeks later you decide to get the options not so good, like when I'm hedging, I get in at the same time, so the effect is pretty similar. Whereas so you want to be getting your options at a certain level where there's a certain level where you can make losses, but the majority of the area, whether it goes up a lot or down a lot, you make gains or limit your losses.
James, this has been a great show. We did a couple hours here. I see Mickey there asking for you to come back and do another show another time. Unless did you want to cover something else, or do you think it's a good time to wrap it up and maybe we could do it again another time?
Does anybody have any?
Yeah, it's a good question. Yeah.
Want me to go into anything? While I'm waiting for questions, someone asked for my tweet account. Learjet provided me with a good place to do tweets. It's stocktweets.com/Jaymes42. So anyone in the chat room, if they want to follow me, I put ESU1 calls there, and I'll try and post it in the site as much as possible on the chat room. But Like RPM pointed out earlier.
You want me to show you how to get in the futures room? I'll show you how to get. Yeah, just type /join, JOIN, just a /join, and space, # futures. Not that #. The hashtag. There you go. You're in there. No, you're not either. You're in the wrong channel. right click on that one and hit close at the top right hand corner, I believe.
Yeah.
Click that and then no, all the way over on the right hand side.
Okay, yeah.
See the X?
Right.
The X. The X over on the right.
I got it now.
Okay.
I just wait till it goes back to this room.
Yeah, the I call it the #. This one.
Hold on.
Go back to there. You go. See is join and then it's that symbol right there, but it's /. It's / join and a space, and then what I call the #. See that the red one there?
Yeah.
And futures behind that, and it'll put you in the futures room.
/join hashtag, or the hash, yeah.
Yeah, hashtag, yeah. And space.
All right, okay. Oops. So I'm working with a laptop here. My computer's in for repairs, people. So space between the futures, yeah.
Yeah. No space between join and the hashtag. Nope, other way.
Is that right? Yeah.
Yep.
Yeah. No, what I was saying was, as you know, like I work quite hard, so I rarely get time to get onto the day trading radio site. I do try and have it up in the background, because I like to listen to what's going on. But I do try and get on and to try and post some live trades for you guys. And I'm always in. If I'm in the room, I'll say whether I'll be in for a while or not. And if you need to ask me anything, that's fine. I can give you a little help. And if you want, I'm thinking of taking a holiday soon anyway. If you want, you can send me details of how you trade, and I can have a look and see what ways you can go about correcting it or making it better. But that's if you want. There's plenty of good traders out there. It's not just me. So you gotta with Day Trading Radio. If people who are listening to this who aren't from the site, I suggest taking that 2-week free trial, because there is a lot of good traders on here. They have a chat room, and you can learn a lot.
If you go into this room here, just want to point out that mostly just futures trading in there.
So no junk talk.
No, just Learjet. He does that, but it's all right. But yeah, just pointing out to roller coaster there, the menu button, and then go into list channels. Roller coaster doesn't work for the HTML version, and that's the one downside to that. The Flash Chat and Java Chat, you have a channel list. HTML version, you do not. So
I just wanted to see if anybody asked any questions that needed answered.
Sure.
Yeah, Mickey asks, how do you keep track of all your price targets and stops as you're watching so many PSNS? Excuse me. Well, there will be trades where I do have fixed stops, fixed limits. Then there's algorithm trades. I am currently looking for a new programmer, preferably a friend of mine, to just write me some programming codes which executes on certain, it asks questions in like C and Java, the language. They'll write a program and it'll take live feeds from the market and say, is the FTSE 100 at this greater or equal to this price, or less than or equal to this price? If so, roll on package bull or roll on package bear, and then package bull or bear will be like a list of trades to execute. It'll go to each of those trades and then see if they're in a certain position for me to buy or sell. Like, I'll only want something at a certain price. If it's in a channel trend, I really won't want it if it's moved 25% off the bottom of the channel, unless it's more of a fundamental reason. So it'll, it's a complex program. It runs through, FTSE, is it here? Are the stocks in position? Sets trigger to buy it. It automatically buys through my platform. So that's one of my like portfolios is set to assign to that. What you saw at the bottom of this page is an algorithm which picks maybe 100 stocks in the market, and I like to trade them all. Sometimes if I'm not trading anything else, but I can just get into these positions right now and hold for these by the way are 2 weeks outdated, but I'm still holding pretty much all of them except Rio Tinto I cut. I check my algorithm, every Friday. I run the program. It tells me if any of them are not one of the best anymore in the top 100, and then I cut it and I will replace it with what's become new. So I could hold maybe one of these stocks for 2 months, and some of them will change out per week. Others you'll see, staying for 6 months to a year. So that costs a lot of workload because I've got programs doing this for me. And I can sort of, because it's market neutral and designed to make money whether it goes up or down, I can just sort of leave that, without looking too much. The only flaw with it is, if the markets were to, not the markets, sorry, if that company in particular, a long company, some news came out and crashed it, that's one thing it doesn't prepare for. But that you could say that with every single trade. It's designed to every possible, ability to be profitable, except for unpredictable circumstances. And I'm not talking about the economy crashing off. I'm talking about that company in particular having some really bad news. But then there's occasions where you get companies that have really, really good news that pop up, like Core's DTRS had it on his watch list. I don't have it, by the way. I'm just saying it popped up 15%. You can get stuff like that. Again, you can get stuff popping down 15%. That's probably the only weakness. But if you keep up to date on your fundamentals every week, you should know what's going on. If there's reports coming out that week for a company, you can either cut it or reduce your position size. You just you constantly sort of keep a look at it, but more once a week. So that, again, like I said, cuts a lot of my workload. And then I have once a month, for the rest of this, I would, pretty much pick a lot of stuff. Sorry, this here at the bottom, like I just showed you, is what I do every week. Maybe I change one or two out every Friday. The rest of it is, good for the month. Maybe I'll cut some of the positions 1 week, 2 week, or 3 weeks into it. But I have that for a month's outlook, maybe even longer. Some of this stuff might stay in 3 months, whereas the rest of it might have been changed for new stuff frequently. And then just a lot of determination and effort. I read something in the chat room the other day that said, is there a place you can find a list of stocks that are bearish? Apart from what I just showed you, not really. Like I was saying, if it's as easy as going to Google, typing in some stocks that are likely to go down, everybody would be doing this job. Nobody would be putting in the work hours. But that's what this job requires. If you want to be good, you have to put in, the work. I'm not saying you have to work as hard as me, no. But if you want to treat this like a normal job, you need to be working the same hours of a normal job. 9 to 5 or 9 to 4, I think it is for the American hours on the ES or on the S&P indices. And then you'll frequently, I have friends who are stockbrokers. They get up maybe 6 a.m. 2 hours before the market's open, and they don't leave till maybe 3 hours after market close. So even they put in a lot of work as well. So it's really up to you how much work you want to be in. You can be RPM, he's like he said, he's retired. He's more doing this just for the fun and being in the community. You can be laid back, but if you want this to be a personal job, you treat it like a personal job. You take a professional approach and you put in professional amount of hours.
Well, it's just a hobby now because I'm not really successful at it yet.
Yeah, but I mean, yeah, you're sort of half relaxed, yeah.
Well, I mean, I
mean, you put in your work, but
my workload goes into helping,
Yeah.
Day Trading Radio, the site, and I get paid, pretty good to do that.
Yeah.
So it's turned into a job that has, but I don't see myself going away from even if I didn't have if no one needed me for anything particular, I can't see myself pulling away from the markets because it's addictive. It's one of those things that I just want to be involved in it, whether I'm losing money or making money. I enjoy being involved in the market. So, but I can see that you're putting in a lot of time, an awful lot of time.
Yeah. But this is like my full-time job, and if I want to retire early, I'm gonna put the effort in.
And then you'll be right back.
I don't think I could quit this job.
That's what I'm saying. It's like.
But right now, I'm at the stage in my life where I would love to quit working for myself and work for a firm where I have the chance to work with a portfolio of maybe 50 million to 100 million.
Do you think you could make more money that way, or do you think you're better off controlling your own destiny working with your own money? I mean,
over time, my way works for more money, but it's more for you're trading in an environment surrounded by people who have the same professional like work approach, same goal orientation, and I would like to sort of build my reputation in the financial industry a bit more. That's something I would like to do. Not for money, but I would just. I think it's one of my dreams that maybe run a fund worth 50 million upwards for a good 5 years maybe.
Mm-hmm.
It's something I would like to do. Someone says, do I play any of the British companies who are drilling in the Falklands for oil? I don't know if you're excuse me, if you're from there or from the from anywhere around there, but you probably have the same sort of opinion of the British that I do. Not that I hate all British, I just joke about. But there are not that I'm too aware about the whole drilling in the Falklands, but I mean, I know what's going on, but the companies haven't looked too much into
James,
it.
We just got bumped off the air. I don't know why. So let me. That sucks.
No worries. We said Falklands.
All right, so maybe we should just wrap up the second part, so I don't have